What's up, traders? Welcome back to another video here at Forex Life. I hope you all are doing well. Had a fantastic Monday. Hope you guys killed the market and made good profits. If this is your first time on the channel, please go ahead and like, subscribe, and turn on your notification bell so you can get notified when I do drop the new video. Like I said previously in my other videos, I'm doing a series where I'm answering questions from my students and from my followers and what they are struggling with in the market. And this video today, guys, we will be discussing and looking at what is the best time frame to do analysis on boom and crash. Okay, so one of my students asked me best time frame to analyze boom and crash. So this is my personal opinion. Everybody's trading style is different, but from over the years of trading boom and crash, I have learned the best time frames for me personally to trade is doing analysis starting on the 1 hour and dropping down to the 15-minute and taking my trades on the 15-minute time frame. So I'm just going to give you guys an example. Okay, remember, if this is your first time, subscribe, click that subscribe button. Also share this video, guys, to your friends, your families, your groups that you are in, to help people who want to learn how to trade, that are struggling with whether it be forex or synthetics, which is derive our volatility pairs, boom and crash. They're struggling with anything regarding trading. Everybody's trying to generate a second income. We are living in a world with tough times, so let's help each other out and help me also by helping this channel grow. The more the channel grows, the more videos I drop, because it shows me that you guys actually like the videos that I'm putting out there, the educational videos, and you guys are benefiting from it, and it makes me feel good. So the more interaction I have, the more videos I will be dropping. So let's have a look. We're going to start with boom 1000. Okay, I'm not going to go into depth with the way I trade, how to do your analysis, all of those things. I'm just going to be working on time frames. And if you watch the previous video, you'll see the market structure. You can see clearly on higher time frames. It will give you a sense of direction on which way the market is going. Okay, so what I like to do is I will look at the 1 hour time frame. I can clearly see that this is an uptrend. The market has been making higher highs and higher lows, higher highs, higher lows, higher high and a higher low. Okay, so what I'll do is I will mark up my key zones. So over here I can see that's a nice resistance zone. The market has been failing to break above the zone now. 1, 2, 3, 4, 5, 6, 7, 8, 9 hours for 9 hours. So that is a really strong zone over there. However, the market is still in a complete uptrend. Okay, the market is still in a complete uptrend. So what I'll do is I'll mark up these zones. We have a nice wick rejection over here, and then I will scale down to my 15-minute. I won't mark any other zones. Maybe just over here I can see another support zone over there and another one over here, but this is moving away from price and I want to be where price is now currently. Okay, and currently price is over here. So now I'll go down to my 15-minute time frame and I'll see, okay, on my 15-minute time frame, what is the market showing me? So the market showed me over here, it's a nice double top, and it fell all the way down to the previous support. However, we had a nice push to the upside. So most likely we are still going to, our market is still bullish. The 1 hour time frame confirms that for us. We are still bullish. We did not have a break of structure. We did not have a change of character. We did not have a trend directional change. Nothing happened. We are still in the market structure of a bullish market. So I will only be looking for buys on this market. So what I'll do is I'll wait for price to break above over here and I will take my entry. I'll then go ahead and take my buy because price could come down again, reject a bit and then push up. So I will wait for this break. Once it breaks this high over here, I'll then enter my trade, and what I'll do is what I normally do in order to get my take profit levels, I will zoom in, okay? So this is where price is currently, and I will just mark up these highs over here, these zones that I see. I will mark up these zones, and this will be my take profit levels. Okay, these three levels will be my take profit levels if the market continues in the uptrend. If it continues in the uptrend, I will go for it because we are, like I said, this is a strong resistance zone. And when we look to our left, we can see why it is a strong resistance zone. So we're going to wait for price to break above. Once price breaks above, this will be my first target and that will be my second target. So I don't look at other time frames. It's not really, for me, it's not, how can I say, not that it's not informative. It's just not necessary. For boom and crash, for me, it's not necessary. I literally look at those two time frames, the 1 hour for direction and the 15 minutes for my entry. If I want to drop down to a lower time frame, I will then go down to the 5-minute time frame. And here you're going to mark up your minor support zones, your minor resistance zones over here. So if price comes down to this zone again, you can enter over here and catch a spike. But if you're looking for long-term trades, I do the 1 hour and then I drop down to the 15-minute. And like I say, those are my take profit levels based on the 1 hour on previous highs. That's where I will put my take profit levels and then I'll take the trade. The same goes for any other pair. If I put on crash 1000 for example, so I'll start on the 1 hour time frame and I will mark my levels. Currently that's a level, that's a level, this is a level over here, and this is a level over here. Then I'll go to the 15-minute time frame and I'll look and I'll see, okay, I do have another minor zone over here, right over there. Price broke, should retest here on this minor zone and continue falling. I'll then go ahead, I'll enter my sell. Remember on the previous video, stop losses, those were stop losses for catching spikes, but in the market structure video, I did give you guys a hint on where to place your stop losses. So on this trade, personally, I won't place my stop loss just over here. Okay, this is $1.28. When I trade, I don't look at the monetary value. I do not look at the monetary value. I will repeat that again. When I trade, I do not look at the monetary value. Because once you are looking at the monetary value of your trades, that is when it messes with your psychology. You need to trust your price action. You need to trust your analysis. You need to trust the system you are working with. And this is what I teach my students. Don't look at the monetary value. So my stop loss will not be placed over there. Why not? Because this is a minor zone. This zone over here is the major zone. So my stop loss will be above the major zone. Okay? So this is a major zone, and over here I see this little wick. I'm going to put you above that wick. Okay? I'm above the major zone and I'm above this wick rejection over here. That is my stop loss. My stop loss is $5, but I don't look at the monetary value. Where will my take profit be? This will be my take profit, right? My first zone, this will be my take profit. That's $5, so it's a 1-to-1 risk to reward. And then this will be my second take profit. And that is how you place your stop losses. In this video, we're going for stop losses as well. Sorry guys. So that's how I personally analyze the market, and I take a trade. If I'm doing long-term trades, this is what I do. Or I just trail my stop losses, like in the previous video. I trail my stop losses and catch as many spikes as possible. But 90% of the time, guys, I use my systems. I've been in this game for way too long. Analysis, you need a technical analysis, you need your price action, if you're taking longer term trades, if you're trading VIX, even boom and crash, all of these things. But me personally, what I do, guys, is I combine that with my systems, and I use my systems. 99.9% of the time I use my systems and I'm profitable. And I just apply these with it and I take my trades. I send my signals based on my price action. And my price action corresponds with the system. We're going for gold. We're going for gold and we're going to kill it in the market. But like I said, guys, 1 hour, 1 hour time frame, current price. I just mark up my current price. I move down to the 15-minute time frame and I take my trades. I place my stop loss where it's necessary, where the stop loss needs to be, not where I want it to be. Not because I'm only willing to risk $1 on this trade, I'm going to panic because I'm negative $1. No, guys. I put it where the stop loss needs to be placed. The stop loss needs to be placed above the previous high, which is over here. This is the previous high. This is the 15-minute time frame. Market created a high, created a lower high, lower low, and then created a lower high. So if market comes and breaks through this lower high over here, what does it mean? It means that there's a break of structure in the market and there is a possibility of a trend reversal. Market will then be going to the upside. So it hits my stop loss. I know it's going to the upside. I'm getting out of that trade. My stop loss is there to protect me, to protect my account, and to protect my equity. So it's not where you want to place your stop loss, it's where your stop loss should be placed. Okay? Time frames. If you guys want, you guys can always look at higher time frames, 4 hour, the daily. But I literally look at the 1 hour and I look at the 15-minute. I don't overcomplicate my trading. You guys will never see my charts full of lines, trend lines, and the Fibonacci, and support, resistance, and order blocks, and supply and demand, and all of my charts are never full, guys. It's simplicity. Trading is so easy. It's simple. The moment you overcomplicate things, that is when trading becomes difficult. You shouldn't overcomplicate things. You should just keep it simple, and that is what I teach in my course. You keep it simple. You get my system. If you're trading boom and crash, do yourself that favor. Invest in yourself. You don't need to invest in my products. You can invest in someone else's products that you find works for you. But invest in yourself, in a product that is going to help you in your trading. I use my Viper system. I use my spike detector system. I don't overcomplicate things. I look at the trend of the market. Okay, we are in an uptrend. Because we're in an uptrend, I'm going to take the signals the Viper spike system gives me. Follow the rules of the system. Follow the stop loss method. It's as easy as that, guys. As easy as that. You don't need to complicate things. You don't need to overcomplicate things. You keep it simple. And you're good to go. You're good to go, guys. So if you want to learn more, if you want to become a profitable trader, if you want to learn more about my systems, like I said, there's a playlist on my channel. Click on the playlist, click on Forex Life Systems, go through it. Like I said, you don't need my systems per se. However, I haven't heard anyone that has not been profitable with my system. When someone do message me and tell me they've taken a loss, I ask them, what did you do? Let me see your trading history. Let me log in via TeamViewer. Let's go through it. Let's journal. Let's see what is the reason why you took a loss today. And then at the end of the day, it's not the system that was at fault. It was the risk management that was at fault. So that's all I have for you today, guys. Hope you guys enjoyed this video. Remember to share this video as much as possible. Our goal is to get to 10,000 subscribers, guys. Like, comment, and join the community on Telegram. The link is in the description below. I'll see you guys on the next video.